just want to say thank you for taking the time today. And the fact that you showed up means that you are ready to invest in yourself. Today's theme, being Valentine's Day, is obviously to love yourself and learn how to trade. Okay? I chose this theme very intentionally because loving yourself is more than just self-care. I mean, it was supposed to be for ladies only, but when people heard he was going to be here, then everyone else decided to join. Okay, so loving yourself means building your confidence, creating your own income, and not depending on anybody else financially. Okay, it's securing your future. And I feel like financial independence is self-love. So when I started trading, I didn't know much. I was obviously very confused, scared. I made mistakes, all the mistakes we could have made. But what I did have was the decision to learn. And that decision changed everything. Having multiple streams of income, freedom of time, and the ability to grow beyond limitations. And today, I want you to see that this is not only for men in suits or financial professionals, but it's for moms, wives, students, working women, businesswomen. It's for everybody, and it's definitely for you. So before I start, I would like to ask, why did you guys come today? Let's make this interactive and perfect, yes.
By guidance of someone, they're telling me what trades to take, and that's the only exposure I've had. Not really reading the markets and looking at the zones and stuff like that.
Anybody else from here that are first time traders?
It depends what first time trading means.
How long have you been trading?
I invested around last year myself.
And any big wins?
Yeah. And I think I know exactly what I'm doing because I'm not clean.
No, but did you have any big wins? Like trading news and stuff, did you win any big money?
No, I never traded news.
You never ever traded news?
No.
I traded just once, 45,000.
Wow, that's good.
There was some gave the signal, I think it was NFP.
Yeah.
And they told me what time to take the trade and when to close the trade. And it went up to 60, and then I let it go, and then it dropped, and then I closed it at 45,000. So that's what we had.
Oh, you definitely hooked.
Hey?
You definitely hooked.
Anybody else? You guys said you were traders. Share some of your experience.
Yeah, I only trade news. I'm not a day trader.
Mm-hmm.
I only look for news like CPI and also NFP. And I also get signals from one of my friends.
So how are you trading news? You analyzing yourself or you just taking signals?
Sorry?
When you're trading news, you analyzing yourself or you just taking signals?
No, I'm not only taking signals. I just make sure that what you told me is something that I see on the chart. Yeah, I do analyze.
Okay.
Anyone else? No? Okay.
Anyone have like bad experiences with trading? Anybody got scammed?
Oh no.
Share your story.
It's embarrassing, but you see, last year, when I've been a teacher for the last 17 years, and I had an accident last year in May, which caused me to have a spinal injury. So in December, I got medically boarded from the Department of Education, which totally threw me off the line because I didn't expect to be boarded at the age of 36. So that's the reason I went into trading, because I needed an income because my salary just stopped. So I started doing my own thing and joining the free groups and all of that. And whatever little I had, income coming in, that money just got blown. And there was one person on, I think TikTok said, it was one of the news things that if you contribute, you'll get like a 9,000 or 10,000 return on that day. And what had happened is we put the money in, he made the money, and then he says that his broker was not allowing him to do a withdrawal. But at the end of the day, I knew that was not true because he took money from everybody, he made his money, and he didn't want to give it out. And then at the end of the day, he says, no, I'll give you a free bot. And then when it came to the bot, there was always issues, you know, like email, they changing settings and this and that. So eventually I just gave up with that.
Okay, so my advice is if you come across on social media anybody saying give them money to trade, that's a red flag, or any investment schemes, or any situation where you're not in control of your funds. You should always deposit into from your personal bank account to your trading account, from the trading account back to your personal bank account. That's a side door. If anybody takes investments or you hand your money over to somebody else, it's not allowed in South Africa. Account management is not allowed. So those are all scammers. So make sure you're chatting to the right person. If you're not trading with us, trading with a different influencer, make sure you video call them, speak to them, and do it the right way.
I didn't know how to go about getting started because at the end of the day, I was on so limited funds, you understand? Because I didn't know when I was going to get my package.
Yeah.
So basically sitting on about 5,000 or 6,000, you want to take that money and turn it around because you have a family to see to, you understand? So that's where I was stuck. I couldn't take 1,000 and just pay somebody to teach me. That's where I went wrong, you know, and then I ended up losing everything.
So.
I'm sorry about that, but we all have to pay school fees somewhere or the other. You got scammed, some of us do hundreds of thousands.
Okay, well, today is not about becoming rich overnight. I mean, that doesn't work, and anyone who tells you that you will be rich overnight is definitely lying to you. It's about understanding that how this market works and realizing that you are capable of learning it. So by the end of today, you'll basically learn what Forex is. You'll know how trading works. You'll see how we use HFM as our broker. You'll understand a little bit more about MetaTrader 5, and you'll get basic technical analysis from Jay, and if we're lucky, he will show us the Holy Grail as well. And most importantly, you will learn that you can do this, okay? It's not something that's far-fetched. It's a real thing, and people are making real money, and you've come to the right place. So Forex simply means foreign exchange. It's buying and selling of currencies. And every time you travel and exchange rands for dollars, that is Forex. The only difference is that in trading, we profit from the price movement, okay? So the Forex market is the biggest financial market in the world. It runs like 24 hours a day, and it moves because of news, the economy, and supply and demand, and global events. So in trading, we buy when we believe that the price will go up, and we sell when we believe the price will go down. There's only two things you can do, okay? It's a simple concept, but what makes the difference is knowledge, discipline, and risk management, okay? So we use the broker called HFM. So a broker basically connects you to the market, okay? And the platform that we use is MetaTrader 5. All right, so that's where you're going to view your charts, open your trades, set your stop loss and take profit, and track your profits and your losses as well. So when we open a trade, if the price moves in our direction, we profit, and if the price moves against us, we lose. That's why risk management is important, and that's how we're going to ask Jay to give us some technical analysis to show us simply how to open a trade, how to close a trade, and what the charts look like. Because obviously looking at it for the first time is very overwhelming because you don't know what the candles are doing or what the chart is doing either. So he's going to break it down quite simply. And I just want to also say that trading is not gambling, okay? If you trade with emotions and desperation, then you will lose. But if you protect your capital and don't risk money that you're not willing to lose, start small and be patient. That's the advice I can give you, because consistency definitely beats the hype. You know, if you have a losing trade and you give up, then you're like, you know, Forex is not for me. You have to try and do your best, and you don't need to rush because the market's not going anywhere. You don't need to impress anyone. You don't need to do all of those things. You just need to be disciplined. And we are building skill, we're building confidence, and we're building wealth basically the right way. So I'm going to hand you over to Jay now, who's going to show us a little bit more on the technical side. And if you have questions, please let's make this as interactive as possible so that you can learn and take the knowledge home with you. Thank you.
Okay, so when she was saying there's only two ways of taking trades or two ways of making profit from the market, meaning you only can buy and you only can sell. So if you're entering a buy trade, you're predicting price to go to the upside. So when we're talking about take profit and stop loss, see this red block here, this will be a stop loss area, and this green block here, this will be your take profit area. And this specific line here will be an entry price. So if she's saying that we're going to look to buy, so we're predicting that price is going to go up from here to there. So on MetaTrader, we'll enter a buy trade. And this will be you'll enter a stop loss amount and a take profit amount. On the side here is where you're going to see the value of the stock. So whether you're trading gold, US30, NASDAQ, whatever you're trading, this is the price. So when you're setting your take profit, you look at the price and you enter that value for take profit. When you're looking for stop loss, you look at the price and you enter that value for stop loss. So in this scenario, if it's a buy and if the candlesticks push to the upside, then you'll be making profit. And when it hits this top line here, which is a take profit, the trade will automatically close in a profit. And if the trade goes against us and pushes down and hits our stop loss line, then the trade will automatically close in a loss. So it's important to have a take profit and a stop loss, because let's say you fund your account with 1,000 Rand and you enter buy positions and you don't put a take profit, you don't put a stop loss. If it keeps going up and up and up, it'll go into an infinite amount of money. Right? However, if it turns around and starts crashing, as soon as your account goes minus 1,000, it'll blow. So you have to put, and it'll show zero. So basically, you have to put a stop loss. So let's say if you put a stop loss here, if the trade goes against us and starts pushing down, it might close in negative 500. So you're still left with 500 Rand to trade with. Whereas if you didn't have a stop loss, it'll go into drawdown and it'll blow your 1 grand. So make sure every time you enter a trade, the first thing you do is put a stop loss. After you put a stop loss, then you can focus on putting a take profit. Because remember, as I said, if it goes into profits, it can go into an infinite amount of money. So that's fine. You can always set take profits whenever you want. But the first thing that you need to do is set a stop loss. When you don't trade with a stop loss, like for example, I don't trade with a stop loss, but I know if my account is going into X amount of drawdown, for example, if it goes into 10,000 Rand drawdown, I'll manually close my trades. Because I don't just enter one trade, I'll open multiple trades. So let's say if my risk management is, I need to open up a 1 lot. So instead of opening up a 1 lot at a specific price point, I'll open up 10 0.10s. So I'll open like maybe 2 or 3 positions here. Then if it comes into drawdown, I'll open more, I'll open more, I'll open more. And then it'll accumulate to 10 0.10s. And that's a 1 lot. So I know with a 1 lot, I can handle 20,000 Rand drawdown. So at any given time, if my account goes minus 20,000 Rand, I count that as a loss and I close the trade. The reason why I don't trade with a stop loss is because, see, sometimes things like this happen. Price will come and it'll do a quick wick like that. So you'll be trading, let's say we're in a buy position, and we'll set a tight stop loss. Price will go, so now this is a perfect example. So price will go into profits, and then it'll come down, hit your stop loss, and then keep pushing into profits. So I manually watch my trades, but that only comes with experience. So as you get further into your trading journey, then you can start doing that if you want to. But first things first, trade one lot, one specific lot size, enter your stop loss first, then start looking for your take profit. Does anyone else have questions? Things that they always wanted to ask?
Not 0.01.
No, you start with 0.01.
In multiple 0.01.
No, as I said, when you get more experience, then you can add multiple trades.
Okay.
Because if you're trading like a full margin trading plan or trading a specific amount every day, let's say you're budgeting 5,000 Rand for the week. So instead of funding your account with a 5,000 Rand account, especially if you're a beginner trader, do not take the entire 5 grand and put it into your account and say you're going to try and grow that account. Because what's going to happen is, we've been doing this for such a long time that we know that nobody has discipline. So if you have a 5,000 Rand account and you enter a trade, even if you put a stop loss, if it starts getting close to your stop loss, you'll want to move your stop loss. Or you might want to remove your stop loss. And you're going to get stuck in a bad trade. There's a 100% chance that you're going to get stuck in a bad trade eventually, and that account will get blown. So you'll lose the entire 5 grand. But if you trade 1 grand a day, then it's okay, you don't need to trade with a stop loss. These are things I'm not supposed to be telling people, but this is how I made money. So you trade like 1 grand a day, and you trade aggressively. So that's why even if your account blows, you lost the 1 grand, but you got 4 grand left and you're trading 1 grand a day. So you can still trade Tuesday, Wednesday, Thursday, Friday. And there's no way in hell that you're going to lose every single day. So at the end of the week or on a Friday, you might end up with a small loss. You might end up with like a break-even week, or you might have a profitable week. It's still better than loading 5 grand and getting stuck on a bad trade maybe on a Monday or Tuesday, and then your entire 5 grand is gone, and now you're looking for money to fund your account. You don't have capital to fund your account. So the best way to discipline yourself is to split your funds into per day and trade it like that. Whatever happens, happens, but you know you got skin in the game for every single trading day. Because at the end of the week, even if you take a loss, it won't be a 5 grand loss. It might be a 2 grand loss, and you might be still left with 3 grand. Then you only need to look for capital for another 2 grand to take 5 grand for week 2, and then week 3, and then week 4. So with 5 grand, you're trading 20 grand for the month. Whereas if you try and put 5 grand into your account in the beginning of the month and try and grow it, highly possible you're going to get stuck in a bad trade and you're going to lose all your capital. Doesn't matter how big your account gets. You'll still be greedy, or you won't have discipline, and you'll blow your account. So always treat it like a business and try and make the numbers make sense. So run your trading account like it's your small business at home, and run a spreadsheet and track your trades per day, or track how much money you're making per day with an X amount of capital that you put into your account. So that way you can see how much money you're making for the week, and treat that as your source of income. So instead of withdrawing funds on a Monday or Tuesday, or whenever you make profit, you withdraw funds and then you spend the profits at any given time, you should try and stay away from that. Because if you get employed, you get paid wages weekly, or you get paid a salary monthly. So why, when you're in that situation, you can wait an entire month to get paid, or an entire week to get paid, but when people are trading, they want to take profits every day and spend it every day. And that's where mistakes starts happening, and that's where you get desperate and you get caught in scams, or you want to try and make money quickly, or you don't follow your rules because there's no consistency. You don't know what you're doing. So if you start off doing it weekly, where you withdraw only weekly, it'll start making more sense. At the end of the day, you should try doing it every month, like try withdrawing monthly, so that way you pay yourself a salary. But yeah, just try and do it on a Friday, and then see where you stand, whether you made profit. If you never make profit, you don't withdraw. If you made profit, you only withdraw your profits, and you take your capital and you roll it over to the following week. Any other questions? Somebody must have.
Profits that you make for that day, for example, do you move it to the wallet, or do you keep it there and you use that? Is it safer to move to the wallet and just use 1,000 Rand that you have it?
So when you're starting off, try and use 1,000 Rand every day. So whatever money you make, move it to the wallet. Next day, restart with 1,000 Rand. Later on, you can start with 1,000 Rand on a Monday, and let's say you make profit, keep that account on Tuesday and trade it with a bigger amount. Try and do it 3 times before you withdraw, and then start with 1 grand again. So how you level up psychologically, you'll notice some people, they can trade, like for example, a 5 grand account to 10 grand. Once it passes 10 grand, it starts getting sketchy and then they blow their account. So in the beginning, for example, if you're starting with 5 grand, as soon as it goes to 10 grand, you withdraw your 5 grand, start with 5 grand again. Every time it goes to 10 grand, you withdraw 5 grand, you start again. Then from there, you let it go to maybe 15 grand before you withdraw, but then start again with 5 grand. So you slowly psychologically level up your game where you're dealing with higher numbers, and then you withdraw and you restart. But you always got to restart with a specific amount. The reason why I say specific amount and don't jump around with capital is because, let's say using 5 grand, you use a specific lot size. So you start getting used to your capital amount, you start getting used to the lot size. Don't start chopping and changing with different capital amounts and different lot size amounts. Because then when the trade goes against you, mentally you're not prepared of how much drawdown or take profit you get, or profit you're going to make on a specific trade. But if you're doing the same thing every day, if you're trading 5 grand every day and you're trading a specific lot size every day, you know when you enter a trade, when it goes into drawdown, how much you're going to lose. If it goes into profit, you know how much you're going to make, because you're getting used to it now. You're doing the same thing every day. But once you start chopping and changing, that's when you get confused and start making mistakes. Any other questions?
So you're saying it's not advisable to grow account?
Yeah.
Make money with many small accounts. Playing with smaller game versus growing
So-
100 account.
So putting a larger amount,
You grow it. It's not.
it's
You start with the 5.
right. There's nothing wrong with it. I'm saying from personal experience and from teaching so many people and having so many students, all the guys that do that, let's say they take a 5 grand to 100,000 and they're not withdrawing funds, or even they're withdrawing small amounts, but they're growing their account.
Yeah.
There's one day that comes where they're stuck in a bad trade and they lose that entire account. So why put yourself in that situation?
It's more risky than that.
Yeah, because now you're forcing yourself to have discipline in risk management. Whereas I'm saying if you split your funds, even if you have discipline, and let's say you break your rules, the worst thing that can happen is you're risking an X amount of capital, and your other capital is still reserved and you have it in your wallet, instead of having it in your trading account and blowing everything. Because once you blow everything and all the money is gone, and if you don't have the ability to keep funding with other capital, then you're going to have a problem. That's where people start using their credit cards to fund, and it's a slippery slope. Because remember, with trading, you can't owe anybody money. It's like a prepaid system. Whatever you put in, that's the only amount you can lose. But some people get desperate and they start asking people for money to trade, and then they lose that money. And so just stay away from all of that. Just put a specific amount every day, trade it. It'll help you psychologically also, because you know the worst thing that can happen is I'm going to blow this account, but it's a specific amount that I'm willing to lose every day because I have a budget or trading plan according to my capital per day or per month or per week. So even if you have a bad day, it doesn't matter, because tomorrow you're coming and you got your capital. You can trade. There's no way in hell that you planned for whatever's going to happen, you plan for. Whether you're in a losing streak, you plan for it because you have capital set aside for it. Whether you're on a winning streak, you plan for it, you have capital set aside for it. Does it make sense?
Yeah.
Because let's say we spoke about trading news. He made 45,000 Rand on his news event. So let's say you're growing an account and you enter a trade for news. With news, there's slippage. The account can freeze. Sometimes it doesn't allow you to put stop loss. So let's say it's a news day and you don't even know it's a news day. And you grew your 5 grand account to 100,000. And you enter a trade, and then news comes and it goes against you and it blows your 100 grand account.
Right.
That's what can happen to you.
It happens. So not 100 grand.
Whatever funds is there is gone.
Yeah, so why put yourself in a situation when you can just split your funds?
So the terminology is grow your account, but not leave your funds in your trading account.
Yeah, like
Grow your account,
per day.
withdraw it, and put it in your
Yeah, so
You're putting it, you're putting there, but don't leave the funds in the trading account.
yeah, so you basically, you're going to go from your bank account to your trading wallet. Then from your wallet, you do internal transfer to your MetaTrader 5. So the entire week, you're playing between your internal transfer from your wallet to MetaTrader 5. That's what you're doing. And then on a Friday, you withdrawing from your wallet to your bank account. Yeah? Yeah. So we with HFM, so it'll be in your HFM wallet. From your HFM wallet, you put it into your HFM Premium account or Pro Plus account or Pro account, whatever account. And you trade on MetaTrader. You can trade on the HFM platform as well, but we all use MetaTrader.
Sorry, why? Like, I find that AGFM is so much easier to understand and to use than MetaTrader. So why is it that everyone uses MetaTrader?
Because of social media, we all started off seeing all the blue screens and all the screenshots, and we all started with MetaTrader. But the reason why I use MetaTrader is because there's a lot of tools on MetaTrader that we used to, like Fibonacci tools. We're just used to it. It's just
Okay, so the only thing that I've found that AGFM does not have is that buy limits.
it does have it. You just
Really?
so if you're obviously using the HFM app,
Yes, that's
So
I
you-
use MetaTrader.
so you just ask a chat to a live consultant and tell them you need the instructions on how to use the buy limit on the HFM trading platform, and they'll send you a screenshot or they'll phone you and they'll explain to you how to use it. I don't use it, so I can't. So firstly, we look at market structure. So let's just jump to a M15 time frame, and this will be like, for example, structure that we're looking at. We're seeing that price is pulling up and pulling down, but it's moving from swing lows and swing highs, but it's moving in an upward direction, meaning it's trending upwards. Can you see that? So if we want to predict, let's say this big move here, we're looking at the past and we're saying, okay, it's moving in upward direction. So the Fibonacci tool, you pull from swing high to swing low, and you'll get an entry point. Like see here, you pull this way for a sell position, and you pull it this way for a buy position. Does this make sense? So that's what I'm saying. This is what you join a mentorship program for something like this. So this is your swing low point, right? And this is your swing high points at the top here. So you'll pull this 100% white line. In fact, your trading view won't look like this. These are specific settings that we put to make our Fibonacci retracement to look like this. So when price pulls back, so this is your setup. You pull it first from swing low to swing high. So this white line at the bottom is swing low. This top white line is your swing high point. So you're pulling it there to get your Fibonacci levels. So these are your levels. All is minus 61, minus 27, 0, then 38.2, 50%, 618, 786, 100. So with these levels now, the reason why I got this, you can see these two green lines, because this is your golden pocket. So all my entries will happen at these two green lines, at the 50% level, at the 618 level. I got this purple because I'll put my stop loss below the 786 level. So if I'm taking a trade now, I'm looking for a buy setup. We don't know this is going to happen and it's going to buy off here. I'm just showing you now, but on a live market, we'll just pull a Fibonacci retracement tool from swing low to swing high, and then we'll start waiting for price to come in, tap into this golden pocket or touch any of these green lines. And as soon as price touches those green lines, we want to buy from this area here, put our stop loss below the 786 level, right? And you can see as price touched the 50% line, so that indicated us to enter a buy on a Fibonacci retracement tool. And then your TP1 will be the first white line which will be there, and then we got your TP2 which is there, and your TP3 which is there. So this is now using normal market structure, bullish market structure, meaning it's trending to the upside. So higher highs and higher lows, and then you pull your Fibonacci retracement tool from higher low to higher high, and then on the next higher low, which will be hitting your 50% level, is where you enter your trade, and then your take profits are the new higher highs. So market will move from higher low to higher high, higher low to higher high. As I was saying, you remember it will do a run and then a pullback. So a run will be from higher low to higher high, and then a pullback will be from higher high to higher low, and you'll enter your trade for a discounted price, and then it'll run again to the new higher high, and it'll pull back to a higher low for a discounted price. You'll enter your trade, it'll run to a new higher high. So market will move, run up, pull back 50%, run again, pull back 50%, run again. So we'll always enter from a 50% to 618%, that level there. That's your discounted price. So price ran from here to that level, then it pulled back 50% of that run. People got a discounted price, they entered here, then it ran again. So let's say we want to get the next move. So we missed that move. This will be your swing low point. So as I was saying, it ran from there to there, so to there to there, and then it pulled back from here to here, and then it ran again from there to there. Correct? Then you'll want to take your Fibonacci retracement tool from swing low to swing high. So from this wick to this wick, we pull it white line to white line and pull it across. So here now, where would we enter our trade? At this level here. So as soon as it touched the 618 level or even 50% level, we would have entered our trade here. Put our stop loss below the 786 level, and that will be our take profits. So you can see now, you entered your trade. That's why this is your golden pocket, and you don't just put a tight stop loss. You got to leave room for your trade to breathe. Price pulled down, almost hit our stop loss, came back up, but it pushed to the next run because this was your pullback to get a cheap price, and then it ran again from there to there. So if this was our trade, TP1 would have been here. Does that make sense?
It does when you say it like that, but ask me to try and remember that when I'm not sure. It's going to be very difficult.
Yeah, but this is why we don't use this, and we use Holy Grail and just put our 2 horizontal lines, 2 vertical lines, and trade that at the beginning. Like even experienced traders, they're still trading Holy Grail because this you got to sit and wait. So if you like maybe a full-time trader, it's fine, but if you're working or you're busy, you can't.
Trade signals and just trade.
You can't do that also.
Because it looks like a lot of work.
No, but that's where everybody starts. Like even me, I started joining a signals group and taking signals because I didn't know anything.
But it's frustrating because now you're relying on someone else.
Yeah, but that's how you start. Like you guys are gonna rely on me or us as a team, and then eventually you're not gonna rely on us anymore, and you're gonna trade on your own. So everybody starts somewhere. So the whole point of this is not for you guys to depend on us forever. It's just like maybe a few months or whatever, and then you trade on your own.
So just to repeat that one thing.
What?
50% of the candles break above or below. What is that?
Okay, let's go back to that now. Okay, so here now you can see, let's look at the boxes. You're looking at it on a 1 minute time frame now, right? Okay, so let's look at this one. Price broke below above the box. It broke above, so you take a buy. This will hit your take profit. It might look small, but this is a big movement that happened here. This was 1,400 pips. 1,400 pips is a large amount of pip value that you can actually make a good amount of money on. Like usually, like when we trade TP1 500 pips. So we try and make our money in a small movement like that. So on the chart it might be looking small, but this big movement here, you could have easily made couple of thousand rands trading a small account. And then if you miss that trade, when price broke below, so the box is valid from session to session. So for example, the New York session box is valid until Asia session. So Asia session starts in the morning, and once Asia session starts, this box is invalid. So these levels are invalid. You'll trade the Asia levels, and then once London session starts, the Asia box is invalid, and then you start trading from London to New York. And then when New York starts, then you don't worry about the London box, and you trade the New York box. So it'll go from New York session to Asia session, Asia to London, London to New York, back to Asia, and the cycle continues like that. So here now, on this example, it broke below. You'll enter your sell position here. And then price carry on pushing down. Like these are massive, massive movements. So this will happen on any chart. You can trade USD, JPY, any currency pairs, anything. Use the same strategy on everything. Like let's go to Bitcoin, right? So Bitcoin. So with HFM, Bitcoin is available to trade on the weekend. So Saturdays and Sundays you can trade crypto. So here now, let's look at this, and we apply the same thing. Right here now. See? Buy above the box, sell below the box. Like here would have been a bit of a choppy one, but let's see if you jump to a 5-minute time frame. Okay. So when you're starting out, use a 5-minute time frame. So here now, this is the same strategy we're using, but we're using it on a different pair. Like previously we were using US30, now we're on Bitcoin. So same concept, buy above the box, sell below the box. If it breaks below the box, you enter a sell trade, and then you ride it down. If it breaks above the box, you'll enter a buy trade, you'll ride it up. So whether we can go to NASDAQ. This is now something completely different. Same story here. Can you see the box is there? There's the box. It broke below the box, you enter a sell, you ride it all the way down. So basically, you learn this specific strategy, and then you can trade anything, whatever currency pair you want, crypto, currency, indices, anything you want. Just use the same strategy. It's super simple. Does anyone have any questions about this, or doesn't understand what I'm talking about?
I think you simplified it quite a bit.
You put your hand up, talk. Yeah. You're not trading in that time, you're just watching. Yeah. Yeah, after uppers 4, if it starts trading above the box, we're looking to buy. If it starts trading below the box, we're looking to sell. And that's it. There's nothing else. You start with the Holy Grail, and you start with our signals. You take our signals, you take the Holy Grail, you start playing around with Forex. Once you get the hang of it, you stop the signals, you trade Holy Grail. If you want something more, you take the mentorship, you start learning Fibonacci, market structure, order blocks, support resistance, fair value gaps, all of those things. And then that's when now you're going full-time trading and you want to, swing trade or trade your own setups or trade according to your time. Then that's where you go. But you start with Holy Grail, start with signals. That will be like your first 6 months to 1 year. I say give it that. Try and get your psychology right. Try and budget your trading. So you have X amount to trade per day. Open a spreadsheet, run a spreadsheet per week. Do all of those things and use your first year just to get the numbers right and start being profitable before you start jumping and just trying to learn new things all the time. As soon as you do that, every time you learn a new thing, you make mistakes and you lose money. So let's say you start Holy Grail. At the beginning, you might lose money because you might not fully understand everything properly. And then you'll say, okay, this thing's not working for me. Let me take the mentorship package. Then you take the mentorship package and then you start learning about market structure. Then you start trading market structure, but now you're also losing money because maybe you're not doing it properly. Then you'll say the next lesson on the mentorship will be Fibonacci. Then you start using the Fibonacci, but you don't know how to use it properly. So you start losing money in the beginning. So you start system hopping from one thing to the next, but you're just losing money. Then you're like, hey, this Forex thing is not for me. But instead of just using, for example, Holy Grail, but for a long period of time, and you're finding your profitability and you know how to use it properly, and then moving to the next thing. So when you learn something new, don't start trading it on a live account immediately, because maybe you're doing it incorrectly.
Can I ask a question? Sorry.
Yeah.
So when you guys give us signals, what's the format? Is it like everybody else? Is it enter,
We give you,
TP1,
yeah.
TP2, and stop loss?
Yeah.
There's nothing in between that we wouldn't understand.
Nothing in between that you wouldn't understand. And a lot of our signals are also Holy Grail signals. So if it starts trading above the box, we'll send, okay, buy US30. Start trading below the box, we'll say, okay, sell US30.
Another question.
Yeah.
This whole robot thing, how
Yeah.
does that work?
So the robot thing is for people that don't want to do this. They don't want to look at the charts. A lot of new people will put onto the robot first because it gets, they don't even need to put a buy or sell or TP or stop loss. The bot will do everything for them. It's basically a trading app that we developed that will load onto your phone. And then when the robot is executing trades, it will automatically execute on your phone. So
And you still get to decide the lot and all of that, or does it do it automatically?
you get to decide a lot. You're in control of your risk. So a lot of people that are using the bot, this is a mistake they firstly make. They even though they run a small lot size like a 0.01, they'll fund like 500 Rand to 1,000 Rand. But there's different modes on the bot. We have normal mode, we have attack mode, we have aggressive mode. So normal mode, it'll open 1 trade. Attack mode, it'll open 7 trades. In aggressive mode, it'll go full margin. The reason why we've got different modes is because there's different people like to trade more aggressively. Some people try to trade with a lot more risk involved, less risk involved. Some people like to go full margin for news events. So those modes are there. When you have a large account and use a small lot size, you can use normal mode. If you want to try and just flip an account, you can use attack mode. If you want to try and trade any high impact news event, you put it on aggressive mode.
So what does that app attach to? Does it attach to your MetaTrader or
MetaTrader.
It attaches to you.
Yeah.
And then I promise this is the last question. I won't skip
So it's not specifically attached to MetaTrader. It's attached to your trading account. So if the robot is taking trades, it will show on your HFM platform. Trades are being taken there as well.